What is going on, everyone? My name is James, back here again giving you guys a breakdown of the market just like we do every single day, kind of trying to help you guys navigate the price action, maybe understand it just a little bit more. So today is the day. Today is Wednesday. It is 9/11. Prayers going back to, obviously 9/11, 2001, tragic day in our nation's history, the United States. But regardless of that, moving back over to trading, it is CPI day. CPI day here. We do have news at about 8:30 a.m., so in about an hour's time from when I'm recording this. We will know what the inflation report is for the consumer. And then tomorrow we do a PPI, so we will be hearing the wholesale end of it and just seeing, is it cooling off, is it getting hotter, is it staying the same, etc. I don't exactly know what the estimates are, to be honest, right now. I did not look into that. I probably should have before hopping on here, but regardless, we're going to go over basically just price action based, the key levels to watch out for, assuming that we're going to have some decent volatility here today, which I think is pretty likely. With CPI, we typically tend to have more volatility, especially PPI. Actually, surprisingly, CPI sometimes can be more of a choppy day, more indecisive, maybe an initial pop and then kind of just consolidation. I've seen that more often than not. And then PPI, when PPI comes out and they know the wholesale end of it, that's when it seems like the true market direction comes out. But we'll see what happens here today. First and foremost, the one thing I want to point out to everyone is just how we're still in this kind of range, this trading range that we had from Friday. So Monday here, Tuesday, yesterday, you can see that we really haven't made any crazy moves. Yes, the market has been moving. It's been actually pushing up, but we haven't made any meaningful moves outside of this range here. So I am going to just jot those levels, like literally lines at those high-low of day on Friday, just so we know that we are still within that range. Nothing has really changed. We've just been seeing kind of just chop action, up, down, as you can see from the last couple of days here. Nothing really changing here, just kind of overall choppy action. Nice little gap up. We have the bear gap down still that needs to be filled or should get filled eventually. The bull gap up is what I meant to say. It's early, guys, bear with me. But yeah, we do have this little gap here to about 540 from 543-ish. It still definitely could get filled. On the 4-hour time frame, these larger time frames for SPY. You can see we're right at that 200 EMA, so we're literally just waiting to see what the news brings when it comes out, when CPI data comes out. Sorry, apparently it's really early. But yeah, it's all going to depend on the news that comes out here, but we can identify some of those key levels to watch out for with some volatility. 551.54, 551.50. That kind of area right there, arguably, that is the high of day there from Friday, so it's still at our range. But I would say that mostly 552 essentially is that spot that I'm watching for a break to possibly take us up and retest this support up here. You saw we had this support for so long up here. We broke down through it. Now we're starting to trend below it, but we never really got a proper retest of this level. So I'm really hoping that if we do break to the upside, if we break 552, I shouldn't say really hope, I really do believe that we are going to push up into that that mid 550s area, depending on, how the data comes out and the reaction. We could go higher, but ultimately I think 555, 556 would still be a healthy pull back for the bears to continue back down. In the more long term, the 2 weekly time frame, if you will. So as far as downside, obviously we have that low of day there from Friday. We also have the low of after hours Friday, which was about 537.86. We've mentioned about that 537.50 area, which this generally would fall into. If it breaks down right here, I anticipate that this could, push down through that pretty quickly into the lower 530s. But again, we have a couple levels to break before that. Biggest level, obviously 552 is for the upside. I think that that is going to be your larger movement level. Now, if we don't really get much price action out the gate as far as a reaction to CPI, I would say that you're really looking for that full break of 549.50, just under 550, to give us that nice like $2, $2.50 push up. As far as downside, we have a little bit more. We've got a little bit more breathability, if you will, or a better entry to take a short here, in my opinion. I think the downside for this very moment right now, the downside is favored a little more, so it's not as thin as the upside potential currently. So I would say right about, what are we looking at here? It looks like this 546.40 area, breaking down that and holding that, you know, that was essentially the 545, 546 was essentially the pre-market low on Friday. So I'm anticipating that if we do dip right back down underneath of that, we could possibly see some continuation to the downside. I think the next test of the downside here, I wouldn't be surprised to see this gap get filled. Just because of the amount of times that price action has tried to push down hard and hasn't really succeeded. So that's my opinion there on SPY. Again, I do think there's going to be some decent volatility. I just don't know if it's going to be today or if it's going to be tomorrow with PPI. But let's get rid of some of these drawings here. So you can see on QQQ, very similar, like we were saying, we're just trading within the range here of about 461.40 to, what is it, 448? Yeah, just about 448. So we're really just kind of trading within that pocket of price action right there. Again, just kind of chopping up and down. But overall, you know, bulls are getting a nice little push here. Again, noting that we have that gap down there that can still get filled at some point. Not necessarily needs to get filled, but could. The key level here, 461.40, would be the first break spot. I think as we approach that, we're going to be looking at, you know, those higher time frame hourly, 4 hour 60 EMA, hourly 200 EMA. So we could potentially see some rejection at the zone there. If we get the breakout of 461.40, the next spot we need to break is 464.40. 464.40 could give us a little bit more traction to push up towards this little section here at about 470. You know, we broke down through 470 rather quickly. I wouldn't be surprised to see some of this open liquidity over here as we break that 464.40 area start to get pushed up into pretty heavily. Maybe a little stop at 469.50 first, just underneath 470. But ultimately, if we get the push to the upside, I think that 470 would be the overall target. Not necessarily today, maybe not even necessarily tomorrow, but I could definitely see that happening. You know, even by the end of the week, if this really wants to push to the upside and break those key levels. Downside wise, again, we have a little bit more opportunity here on the downside as well, considering again we have that big open liquidity at the bottom as far as that bull gap up. So what I'm looking for here is we want to see a breakdown, looks like, of again that kind of pre-market low from Friday. The reason I use that is we're essentially on like a ledge. If you think about this, we fell off the ledge, we're kind of coming back up, we're over the ledge again. If we fall back down below that ledge again, we're likely to create a lower high, which is going to break this current structure we have, which is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. If we start to push down and start to break this area, I think we're going to start setting in lower highs. We might not actually get back above this area right here at about 456, 457. I think if we break under that area specifically, we're going to start to see maybe a shift in the market structure here. So if you want to draw a trend line just to kind of see trend line wise where we're at, you know, you can see that we're lining up pretty nicely, that if we break down below that, there's a very good chance, in my opinion, that we will go for this gap here in that upper 440s. So that's what I got for QQQ. Let's give her some of these drawings here on IWM. Now, IWM, a little bit of a different story. IWM was actually a little more bearish yesterday. For the most part, you can see that we actually did break down out of Friday's range when it comes to IWM and the Russell 2000. We did find almost an exact bottom here on this candle, as we did way back here on the August 14th candle. Does it mean anything? It doesn't necessarily mean like 100% that we just bottomed out, but, you know, basing out over a prior resistance might be some early signs of you know, recovery. Now, I've seen IWM outperform SPY and QQQ before, so this one is essentially, it can be a lone soldier, if you will. They already took the gap, so the bears already took the gap on this one to the downside. You can see it got filled there in yesterday's price action, so we can go ahead and forget about that for now, and now only just strictly focus on levels. We did map out at some point, oh, that's because I just mapped it out, that 205.79 is the low there. Again, a spot that we bounced off of prior August 14th, almost a month ago. And you can see already the price action seems like it liked that bounce right there. A nice engulfing candle off of it on the 30-minute, and then followed by a nice variation pattern and just pushing up. Good momentum right up through the VWAP, right up through our 20, and then getting kind of chopped around at the 60, which has been a struggle to get above. So levels wise for IWM, I think right now the first level we're going to be watching for, the first one I would watch for, is 208.77. I think we mapped this one out before, but 208.77 is still that spot. It's still that area that we want to see break above in order to start looking at calls. Once we break that, I think there's a good chance we go back up to 210 pretty quickly. And then of course, depending on market, volatility, we do have the option to go up towards the high of day there from Friday, which was about 212 to 213, the upper 212s to 213 area. Same thing though with IWM. I think that there is potential over time here, over the next couple of days. If this comes out bullish, you know, we can definitely target this kind of zone up here, this support, prior support, now probably going to turn resistance at 217 to 218. Now again, that's far away, so we won't focus too much on that, but key lows right now 208.77 to 210. If we can break 210, I think we get a shot at 213, 212, 213 area. As far as downside, we can start to see the downside move, in my opinion, once we break under, it looks like about 206.90, so 206.90, 206.85. Once we start breaking below essentially the gap up from Monday, and then our current pre-market low right now, I think there's a good chance we track back down towards 205.79, and then likely, it's hard because like you want to anticipate that there is going to be a bounce there, but I think honestly with the volatility, if we break that, I think there's a better chance that we can possibly see 204 to 205. So let me just go back in here. So this is how I have this mapped out for IWM right there. But that's all I'm going to go over today, guys. I think that the markets overall, SPY, QQQ, IWM, how they react to the CPI and PPI data here today and tomorrow is going to ultimately directionalize the rest of the market as far as tech, you know, even the mid caps, etc. So we're not going to go over NVIDIA, I'm not going to go over Tesla right now because I really don't think it's worth even going over them, knowing that there's all this data coming out. Need to let that play out and see what happens. So that's going to be it for today's video, guys. If you're not used to trading this kind of volatility on SPY, QQQ, IWM, the market in general during these PPI, CPI kind of, you know, datas, I would recommend sizing down, either completely size down like half of your normal size and take any winners you can get, making sure that as we get to, you know, one-to-one risk to rewards, that we're moving our stop losses to break even to protect anything, even if it goes back down to break even, so it's just a wash trade. Just protecting those gains in general, being smart. So if you guys did enjoy the video, please leave a like, comment down below, let me know what you guys think. I did see someone put a comment down about going over, oh man, I saw the comment. You know who I'm talking about. There's a comment on the other video. I did see, oh man, it's gonna kill me now if I don't figure out what it was. Give me just a second here. YouTube. I literally just saw it. Comment. Slowly and staring to understand what, yes, risk to reward. So what I mean when I say risk to reward, essentially, like if you are entering right here at 208 and you are looking for a 1-to-1, first you need to identify where your stop loss needs to be. Let's just say if your stop loss was this low down here, 206.80, and let's say your entry again was at 208. Ideally, to make that a 2-to-1, I believe you would be looking for essentially that 210 area. So just making sure that your risk to rewards are at least 1-to-1, would like 2-to-1, because you always would like to be able to recover if you have a losing trade, recover that on the second trade, or recover that loss from the first trade on the second trade. It's all about the risk to reward and just making sure that when you're identifying your risk to reward based on whatever time frame you're trading, that you're sticking to the plan and overall, respecting your rules in your strategy. So I just wanted to quickly touch on that, but I'll make another video on risk reward and just how I really look at it and how I use it in the near future. So you guys can look out for that. But anyways, guys, gotta get going. Hopefully you did enjoy the video. Good luck today. Obviously, if you're not a part of the community, Alpha Stocks Lab, right down in the description, please do click that link, join us. We're I would say a very happy community. We're all super friendly and very supportive and helpful, trying to help out as many traders as we possibly can. So yeah, I think that's gonna be it, guys. Hopefully you had a good one. Hopefully you have a good one. I need coffee. And I will talk to you guys in tomorrow's video. Peace.